Welcome to this explainer. Today we are unpacking Jash Engineering's Q1 FY27 results, and let me tell you, it reveals a truly fascinating corporate turnaround story. If you follow the industrial manufacturing sector, you know that trying to navigate global expansions while somehow maintaining profitability is incredibly tricky. It's a tough balancing act. But the data we're looking at today from August 2026 shows a company that is doing exactly that.
Okay, let's dive right in. Just thinking about the sheer scale of Jash's operations is honestly wild. They require massive operational capacity to manufacture these critical, heavy-duty components for global water and infrastructure projects. And having that kind of sprawling, modern footprint perfectly sets the stage for the numbers we're about to explore.
So, we've got a clear roadmap for our analysis today. First, we'll meet Jash Engineering, then dive into their Q1 FY27 financial turnaround, explore their expanding manufacturing capabilities, break down their global subsidiary performance, and wrap things up with a look at their robust order book.
All right, Section 1. Meet Jash Engineering, a global pivot. Our explainer today derives directly from their August 2026 investor presentation, which really signals a pivotal moment for the company's long-term global growth strategy. When we talk about Jash Engineering, we're looking at an organization deeply entrenched in heavy engineering. We're talking about creating the massive cast gates and valves that literally control the flow in global water and wastewater treatment infrastructure. Right now, their dual focus is actively navigating a sharp turnaround in overall profitability while simultaneously expanding their manufacturing footprint on a truly global scale.
Moving on to Section 2. Q1 FY27 turnaround financial results. Let's look at the dramatic shift in their financial health over just a single year.
The absolutely crucial point here is their top line. Jash achieved a really solid 17% year-over-year revenue growth. They climbed from 133 crore rupees in the first quarter of FY26 up to 156 crore in Q1 of FY27. And, in the industrial manufacturing sector, posting double-digit top-line growth is a massive indicator of strong market demand and solid execution.
But here is where the turnaround narrative gets brilliant. Just think about this swing in profit after tax. They successfully wiped out a 5 crore rupee loss from the first quarter of last year and pivoted completely to post a 5 crore rupee net profit this quarter. That is a 10 crore rupee positive swing on the bottom line. It absolutely proves that their revenue growth is actually translating into real, retained earnings. To add to that positive momentum, their gross profit surged by an impressive 39% year-over-year. But even more staggering than that is their operational efficiency metric. Their EBITDA, so earnings before interest, taxes, depreciation, and amortization, skyrocketed from a mere 1 crore in Q1 FY26 to a massive 14 crore in Q1 FY27. That tells us something really important. Not only are they selling more, but they're managing their underlying operational costs incredibly effectively. Which brings us to Section 3, Expanding Capabilities, Global Manufacturing. Chairman and Managing Director Pratik Patel highlights a huge operational milestone, noting that commissioning their Unit 1 expansion directly increased their core manufacturing capacity, specifically for cascades and cast valves by over 30%. And let's be real, you don't increase your physical capacity by a third unless you are highly confident in the pipeline of orders coming your way. And that capacity increase, it's part of a much larger, highly structured strategy. Step 1 was completing a rigorous, decade-long manufacturing expansion program across India. With that domestic base finally solidified, Step 2 is an aggressive pivot. They are actively shifting their strategic focus toward expanding their global manufacturing footprint directly into the USA and Saudi Arabia. They're positioning themselves right exactly where the heavy infrastructure demand is.
Let's move to Section 4, Subsidiary Performance, a global breakdown.
Looking at their corporate network, the standalone Jash Engineering entity is clearly the financial engine here. It's driving the bulk of the numbers with 103 crore in revenue and 13 crore in profit. But let's evaluate the international arms. Waterfront Penstocks in the UK swung to a positive 1.6 crore profit on 13 crore of revenue. On the flip side, we can clearly see where the immediate challenges lie. Rodney Hunt generated a hefty 46 crore in revenue, but posted a 7 crore loss. Similarly, Jash Process Equipment generated 8 crore in revenue, but sits at a slight 1 crore rupee loss. So this shows us that while the core business is highly profitable, optimizing those global subsidiaries is definitely their ongoing work in progress.
Okay, final section. Section 5,
robust order book, future revenue. Out of their massive 932 crore consolidated order book, a staggering 639 crore comes from outside India, compared to 293 crore domestically. I mean, this data point alone proves the absolute success of their international expansion model. More than 2/3 of their entire future revenue pipeline is tied to international markets. That strategy of moving beyond India to capture global demand? Well, the data shows it's working exceptionally well. So as we wrap up this explainer, I want to leave you with this to consider. With such a dominant international backlog of 639 crore and those manufacturing expansions freshly commissioned to handle it, how do you think this global momentum is going to shape Jash Engineering's bottom line for the rest of fiscal year 2027? They've laid the groundwork, they've swung to profitability in Q1, and the order book is packed. Definitely keep an eye on how those global subsidiaries perform in the coming quarters. Thanks so much for tuning into this explainer.